Hi guys, welcome back to the mining show. We got a couple of things we need to run through today, a couple of articles and a couple of talks about the Bitcoin and Ethereum price. So let's head into this. So Bitcoin is sitting around 20 to 21k. It had a dip around 2 days ago down to even 17k, that mark. So obviously people have been selling off. It has had a bit of a recovery up back to 20.5k. But we'll probably see another drop off as people start to sell at that 20.5k mark. And as you can see here, the same for Ethereum. We're at 1.1k and it went down to, I believe, $896. So I said this in my video, I think it was on Thursday, that this was going to happen, like the price was going to drop further, and that's like your buy-in point should be there. Obviously if you would listened, you would have known, and you set your buy-in point there just for like if you're trading cryptocurrency, or if you're trying to sell at a decent price, you put your buy or sell points higher. So if you had listened to me on Thursday or Friday, you would have seen this coming and you would have taken my advice and got out before it dipped even more. So what does this mean? Well, there's a couple of articles we're going to go over. This is basically the backlash of this price fall that we're going to go over. So the first thing that we have is the GPU prices crash below MSRP as Ethereum merge closes in. The recognition of the Ethereum mining and the availability chain points precipitated GPU costs to go bonkers. However, as the availability will go up again and Ethereum shift to proof of stake nears, GPU costs crash beneath MSRP. Some GPUs are nonetheless priced a lot greater than the precise costs. However, typically we are shifting in a downtrend. GPU costs crash beneath MSRP. The crash of the crypto markets can also be one of many of this value dip. Simply could GPU costs have shrunk by a median of 15%. The most recent Nvidia TRX 30, which is supposed to be RTX 30 I think, for mining Ethereum have seen a 40% value drop as a result of reducing demand. So it just shows this chart here, from December 2021 down to June of this year. Just seen the prices fall from, it's around 700 I want to say, or maybe 750 down to maybe 340, something like that. A report from Tom's Hardware says that the RTX 3080 is now out there for 650 on eBay. It was a value above 1,000 a number of months ago and even greater earlier than that. Nevertheless, 650 isn't the bottom value. There are listings that place the number of GPUs that are offered even cheaper. For instance, a list of 2,500 is providing 6 RTX 3080s, which brings the worth to $420. So as you know, people have been selling off their GPUs, people have been turning them off because they don't really make any profits anymore, and they're trying to just gain more profits back by selling off their GPUs right now. These GPUs have been extremely worthwhile while Ethereum's market value was on the rise and mining problem was not so excessive. Now it may well simply make 80 cents revenue a day after factoring in energy prices, so it's no exaggerating. The identical can also be the case for the AMD Radeon cards, as the cost of their GPUs are beneath MSRP as well. We know typically that AMD have cheaper GPUs than Nvidia right now, so their MSRP was hit around 2 months ago anyway. Can we anticipate the GPU cost to rise once more? With Ethereum shifting from proof of work to proof of stake, it's uncertain that we are going to see GPUs in such a premium. The final 2 years had been distinctive and there was simply a lot happening. We had that, the availability chain points, the crypto increase and the mining adoption. There'll be hardly any likelihood that we're going to see all of them occurring collectively once more. So yeah, it just goes on to say, how GPU prices have crashed. Personally, in my opinion, I'm not going to be selling any GPUs because there will obviously be a next bull run for some type of cryptocurrency that can be mined with a GPU. It's just going to be a different type of Ethereum. Whichever coin it is, it could be Raven coin, it could be Flux, it could be any of these. It could even be coins that are not even on the market yet. They could just skyrocket and then those are the ones to mine. There's always going to be another Ethereum, there's always going to be like another coin to mine that will be profitable in the future. So just keep your GPUs now and expect there to be, a coin to mine in the future, and you can start mining that. I don't think it'll be too long before any coins start to show up, maybe around 5 to 6 months before we see coins that are profitable. Just because the amount of hash rate joining the network, price normally tends to follow that kind of hash rate and difficulty. Because of the amount of people joining up the network, the difficulty will go higher, meaning it's harder to mine the coin, and that means you get less coins. Therefore, the supply and demand, it goes up. So let's move on to the second article, which is Bitcoin mining's reliance on sustainable energy is up 59%. So we did talk about Nigeria having their cryptocurrency mining on sustainable energy, and this is just going over a bit of sustainable energy in Bitcoin mining. The crypto market is evolving, and the sustainability of Bitcoin mining is a significant part of that evolution. In response to Crypto Monday's presentation on crypto mining final 12 months, Bitcoin mining's reliance on sustainable power stood at 58.4% in a single 12 months. That adopted a 59% improve from its 2021 figures of 36.8%. So that's a fair chunk of, energy that's coming from sustainable sources to mine this Bitcoin. This transfer to extra sustainable power sources is a part of the efforts to curb environmental injury and greenhouse fuel emissions related to mining. Obviously, that's a big thing in the, in newspapers all over the world. Like, how is Bitcoin mining affecting the actual environment? Crypto Monday's Jonathan Merry stated that the Bitcoin business is taking steps to cut back its carbon footprint, in doing so by utilizing renewable power sources and creating new applied sciences that may assist cutbacks in power consumption. The numbers are vital as the results of the electrical energy consumed by miners has lengthily been a priority for many who care about Bitcoin's environmental footprint. Actually, it's one of the many great criticisms that critics levy towards crypto. Obviously, we've just been over that, and that comes into the proof of stake, proof of work, which one's better, because proof of stake takes up less energy than proof of work. In my opinion, proof of work actually drives economies like microeconomies, and proof of stake, it doesn't really drive anything towards an economy, because you can't make money off of proof of stake. It's just like kind of a deflationary cycle where more coins come in, but the price is not scarce because no energy is actually being put towards it. There's no scarcity. It's like when you actually mine physical gold, you have to buy the equipment and all this to mine the gold. It can't just appear out of nowhere because you're holding more gold. So anyway, let's continue. Bitcoin skeptics additionally level out that the Bitcoin mining ventures are reviving decommissioned energy vegetation, nonetheless bringing them to life again as rising environmental air pollution. However, whereas Bitcoin was as soon as thought of among many as the worst polluters, new knowledge reductions that notion. Well, that's obvious if they're, relying on 59% of their energy to be actually sustainable. That means that only 41% of it is actually coming from fossil fuels, or, it could be nuclear energy or stuff like that. It then just finishes off the article and says it insists that the power used has declined by 25% yearly, regardless of the hash price rising by 23%. Obviously, we went over that on Thursday, that the hash price has gone up, the hash rate has gone up exponentially, and we hit a new all-time high just because people are actually joining onto the network constantly. The same goes for Ethereum. We're seeing people just join the network just because they want to mine more Ethereum. Let's get into the third article, which is the Bitcoin hash rate slams down after new all-time high as price continues struggle. So this is kind of like linked into like what the end of that article was going over, how the hash rate is coming down. So the mining hash rate, it just says what the actual mining hash rate is, like it's an indicator of, how many people are actually on the network. When the value of this metric rises, it means more mining rigs are coming online right now, such as a trend may suggest that miners are finding the network attractive currently. So it means that, more people are getting on the network because it's easier to mine. Now here's a chart that shows the Bitcoin's hash rate over a year. I think we looked at that previously last week. As you can see from the graph above, the weekly Bitcoin mining hash rate has set a new all-time high on Ethereum. However, over the last 2 days, the metric has also observed some sharp downward trend, and its value is now around just 200 instead of 230. Revenues of miners depend mainly on a couple of things: the value of Bitcoin in USD and the total network hash rate. Since miners normally pay their electricity bills and other running costs in the dollar, Bitcoin's price in USD is relevant for them. The recent crash at the price of Bitcoin has meant miners' block rewards are worth less now. So yeah, we know that is obviously. The hash rate represents the amount of competition between the individual miners. Higher its value, more divided between the rewards between the miners. So it just goes on to say about this Bitcoin price that we looked over, previously at the start of the video. And it just goes on to say, with continued struggle in the crypto's price in the recent days, it seems miners with low efficiency machines or higher electricity costs have started to take some rigs offline, registering as a decline in the hash rate. So yeah, obviously because Bitcoin's price is going down, the hash rate's going to drop off, because these older miners like the S19, not the S19 Pro, but the S19 is not becoming efficient. It's making probably like 2 pence a day or 2 cents a day, and it's not becoming efficient, so they're taking them offline, which is like, if every Bitcoin mining facility takes all their Bitcoin offline, like all their S19s offline, because they're not profitable anymore, it's just going to drop the hash rate. So it lost around 31, I'd say that's petahash in the last days, and that is just due to the Bitcoin's price falling off, to be honest. But seeming the fact that it has gone back up to 20, we might see a new initial spike rate hash, just because people are bringing them back online because they're becoming efficient. They've probably got it down where they can turn them off and on, like based on the price of actual Bitcoin, so they've got it programmed just to come online whenever it is profitable. Now the last story that I want to go over today is that Russia seems to be preparing to mine Bitcoin with flare gas. So it did come out I think it was on Friday, but we missed that news just by around 2 hours because we uploaded the video at in the morning. We missed it in the nighttime. So it says here that one of the world's largest producers of carbon emissions, the Russian gas giant Gazprom, aims to reduce its carbon footprint by providing its flare gas for Bitcoin mining. The Russian government continues to establish links with major players in the crypto mining industry, despite saying skeptical about legalizing cryptocurrency trading and payments. Russia's state-owned gas giant Gazprom Neft has entered into a partnership with the BitRiver, the largest crypto mining coalition service supplier in Russia, providing hosting services for major crypto mining operations. Gazprom will provide BitRiver's partners data centers and electricity generated from associated petroleum gas, the company announced June 16th. As part of the collaboration, BitRiver will be developing a digital infrastructure based on the oil fields that Gazprom provides crypto mining services from the flare gas. So flare gas is basically a runoff gas. They have it a lot in Texas, where it's just like burning constantly, and it's like a little flare at the top of an oil rig. So what happens is, if they don't need the oil, they just burn it off. It's kind of like as it comes off the oil, so they send oil out, and as it comes off the oil, they just burn it. So you can actually turn that into energy, and that's what they do in Texas. That's why it's so cheap to run Bitcoin mining farms out there. So obviously this team is teaming up with a Russian-owned oil farm to use their flare gas as their energy source. It just goes on to say that Gazprom is one of the largest oil and gas companies in Russia and one of the biggest gas suppliers for European Union. According to the announcement, flare gas-powered crypto mining projects are especially relevant when working in new oil fields that do not have any established gas transmissions infrastructure. That's basically just saying they're keeping their carbon footprint down by using this energy to do something with, instead of just burning it off, because they're looking at their established gas transmission infrastructure, like which ones are just burning off. And another option is to set up such developments on remote oil fields in Siberia regions, as such are associated with surplus electricity and unprofitable flare gas logistics. So Bitcoin obviously is low right now, so I don't know how these Russian people are actually gonna work out how much it's gonna cost to do this. But Russia are also probably thinking right now that they can't sell any of this gas anyway, because of the trade embargoes that countries like the EU, Ukraine, and the US have been putting on them. So they're going to be using this energy to actually mine Bitcoin instead, because they have a lot of oil, so why not? So that's the last story for today. It was a bit shorter than I wanted it to be, a bit longer, but there wasn't really much news over the weekend. Obviously crypto crashed, but we knew it was going to crash, and I said that on Friday. If you guys enjoyed the video, please leave a like and subscribe to the channel. Also, all the links for the articles are in the description below if you want to check them out.